Hello, I'm Bernard Hickey from interest.co.nz and welcome to 90 at 9, brought to you in association with Bank of New Zealand. This is your morning briefing where you get everything you need to know in 90 seconds at 9 o'clock, starting now with news. The Reserve Bank of Australia has held its official interest rate at 4.75%. It says that the strong Australian dollar and an increase in mortgage rates, which was more than previous increases in the official cash rate there, is helping the Reserve Bank control inflation as it deals with the biggest mining boom in more than a century. The Reserve Bank here in New Zealand is likely to hold its official cash rate too at 3% when it announces its decision at 9 o'clock on Thursday morning. Meanwhile, in the United States, Barack Obama, the US president, has agreed a compromise plan to extend tax cuts for both the very rich and the middle classes in America. Democrats, however, are very grumpy about this, and there's some suggestions that it may not be approved by his own party. Stock markets like the idea of these tax cuts being extended. The Dow rose. However, bond markets aren't thrilled about it because obviously extending those tax cuts will make it more difficult for the US government to fix its budget deficit problem. The 10-year yield on the US Treasuries rose 19 basis points to 3.12%. This also followed a poor auction of new US Treasury debt. Meanwhile, in Europe, talk of a bigger Euro bailout fund has been rejected by the Germans. Everyone's now relying on the European Central Bank to keep buying government bonds in Europe to try and avoid contagion. Ireland's parliamentarians vote later today on a new austerity budget. Also, the oil price hit $90 a barrel overnight. Gold hit a record high of $1,430 an ounce. Copper hit a record high, and wheat prices are up too. This is all because of concerns that on both sides of the Atlantic, the US Federal Reserve and the European Central Bank are effectively trying to print their way to economic prosperity. Central banks on both sides of the Atlantic are essentially saying we can dig our way out of a problem of too much debt by creating more debt. People are now worried that this will essentially monetize the debt, print money and create inflation, and that's why we're seeing these commodity prices rise. I'm Bernard Hickey. That was 90 at 9, brought to you in association with Bank of New Zealand.